In today's video, I'm going to discuss whether or not Chime Financial, ticker symbol CHYM, is a good buying opportunity on the dip. As always, I'll go over some of the technicals, and just a heads up, this is a newly traded company, so when it comes to the technicals, they obviously don't really look good. It's been a bloodbath ever since this company's IPO'd, but the biggest thing is it's really hard to find any patterns or support resistance levels just because the company hasn't traded that long. But nonetheless, there are a few things that I think it's beneficial to keep an eye on that I'm going to cover. And then, of course, we'll jump into the fundamentals of the company, which again, we don't have a big history of this, but I'm going to compare it to SoFi, which I feel is a similar company. They're both digital first approaches, right? Meaning they don't have brick or mortar buildings where they're banking out of, right? Like it's all digital. And I love this concept simply because, old banks like Chase or Bank of America, I mean, think about how many buildings they have and how much money it costs to upkeep those buildings, to pay the electric, to pay the rent, all the utilities that go with it. And it's just that times however many buildings they have. You get what I'm saying, right? Where a company like Chime and SoFi, they both have like no overhead expenses simply because it's all digital, right? Like they're not out there buying some brick and mortar and have to build the building and then they have to pay the rent and they have to pay the electric. And no, it's simply just a mobile banking app, and it's fee free as well for clients. So pretty much, when they use the Chime branded credit card, they're being paid a profit, and that's coming from the merchant, right? It's not coming from the consumer, which, in my opinion, people that decide to sign up with Chime, this is a great platform for them or incentive for them to stay and not really go anywhere because they're not paying any fees to use these cards. And they offer different things. They have checking account, they have a savings account, automatic saving, early direct deposit. They do credit building. They also have tax filing services. So it seems like, they're slowly growing, their segments and different, products and services that they offer. But nonetheless, they seem like they're doing pretty well overall. And again, I really like these banking services compared to your traditional banks like a Bank of America. I mean, again, I bank with Bank of America, which is why I'm using them as an example. And I never go to the bank. I mean, even if I get a check, you just take a picture and you deposit it that way, right? So it's like, in my opinion, I feel like companies like Chime and SoFi coming in to, compete for the market share, like it's just going to be a matter of time before they really start blowing the competition out of the water. And I think one of the biggest reasons for that is that their overhead, their cost to run their business is like next to nothing, right? Compared to like, I mean, God forbid, we go into a recession and, you have, banks like Bank of America or Chase or whatever it is that have these brick and mortars, and, they go through a big downturn and now they have all this overhead, expense that they need to pay for to keep, just to keep employees employed and to keep things running. So you get the idea. And if you're new to the channel, again, my main purpose here is just to help provide as much financial education for, especially beginner traders to help make better financial decisions when it comes to making trades or investments into the stock market. And by no means is this financial advice. This is obviously just for entertainment purposes only. Don't copy my trades exactly because God forbid I'm wrong. I'm sure I'm going to hear it in the comments. But take what I'm doing, right, and then go do your own research and then make your own informed decision on it. Now, with that being said, let's go ahead and jump into the charts. All right, so I have Chime pulled up on the 4-hour time frame, and as you can see, this stock has been in a free fall ever since its IPO, and we had some support here, I don't know, around like $29, and as soon as we broke that, I mean, we've just been stuck in this channel, and it looks like we were having a little fake out breakout here where you can see we broke the trend. We were in this channel, right? We started consolidating and then we broke up, and there was a fake out breakout, and we went straight back down, broke that support, and we continue to be in a free fall. Now, as I was mentioning before, when you are trading off of, technicals on a new chart, right, that hasn't been trading that long, it's a little more difficult because you can't really find your support and resistance levels. Or let's say at this point, we can find our resistance levels, right? Like this is probably going to be a resistance whenever, it comes time to, work its way back up. You can actually see that's kind of moving right there with that moving average. That's not really been established yet. And then obviously, we'll probably have some more resistance up around that $29 level right here that we broke, right? And so I like to draw these lines out so then when you're trading, you have an idea of like when you may or may not want to start taking some profits. As I mentioned before in the beginning of the video, I'm going to give you a couple, tips and tricks of what I use when trading a pattern like this, right? And it's like it's a reversal, right? I mean, it's an obvious reversal pattern when you get a sell-off like this, right? And then you eventually get a consolidation, and then you get a break back above, right? I mean, we can kind of look at it over here, right? A little bit different. And it's, again, this was a fake out breakout, but you had the sell-off, right? You had the sell-off, 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 and then we consolidated down at this level here for days, right? And then we finally broke up above. And honestly, if you asked me, this thing was going. But then you can see we hit that resistance level right there, and then kind of double topped in pre-market. It's a bearish pattern, and then boom, right back down. Now, if you were taking this trade, at those levels, right, and you were trying to trade the reversal, then I would recommend putting your stop loss under here, right? So you get in around here, you go up, you get stopped out right here, and then obviously you saved yourself a lot of money by not staying in the position that long. Now, with that being said, that has already played out. Now we're on to the next, and this thing continues to sell off, but I would be looking for the same thing, right? I'd be looking for, the sell-off, which we have now, and eventually the consolidation, right? And then the break above the pattern, right? Whatever that is. So, like, obviously right here, if we're trading, we can't break above this blue line. So when we break above the blue line and hold, right, there's your break of pattern, and then that would be your confirmation of a reversal. Again, depending on where you're trading at, you want to put your stop loss in here somewhere. So, in this scenario, you'd probably, let's just say we broke back above. I don't know. It depends on what your risk tolerance is. But, if we came back up here, broke back above here, was holding, I would say, hey, if we broke back below that level again, we're probably going lower. Maybe I put my stop loss there. Again, it's really up to you and what your risk tolerance is. I'm giving you trade ideas, okay? And again, this is going to be more or less if you're looking for a short-term trade, all right? That's what I'm giving you here. Or it'd be possibly like a swing trade, right? Trading the reversal. So, again, going back into the charts, that's what I would be looking for is a break above here. Now, the other plan, and I'm going to be honest with you, this is what I'm going to be doing. We're going to get into it. I'll go over the fundamentals of the company, and I already kind of told you in the beginning why I like companies like this. And I do not think by any means does this company need to be the next SoFi to be a money maker, right? But I'm going to start buying the dip, and I'm just going to keep dollar cost averaging. I think the stock is low enough at this point, and my time horizon is probably like 3 to 6 months. So again, with that being said, it's a pretty long time horizon. If the stock goes down in the short term, like it is what it is. I again have a decent amount of confidence, and I'll touch on some of those reasons here shortly of why I feel this will be a decent trade. And it's not that need to work right away, right? And again, so if you're someone that like, hey, I need something now. I want to get in, I want to get up, I want to get out, I want to manage my risk. That's it, right? I think this is still a good opportunity. Wait for that consolidation. Wait for the break of pattern, back up, kind of like this right here, right? But wait for it to happen down here. And then, I mean, honestly, even this retest would have been a decent trade in my opinion, but you put your stop loss there regardless because you just don't know. Again, you can see once we broke that level, I mean, that was 6%, 6%. I mean, we're down a good bit after that. And I would not be surprised now that we're down around this $20 level that we hold here. But who knows? Things been in a free fall, as I mentioned. One other thing I just want to touch on real quick, and by no means do I trade off of analyst price targets, right? But with that being said, there are 13 analysts covering the stock, and for it being a new stock, that's not bad, right? That's a decent coverage. And you can see that the low on the street, meaning the most bearish analysts, which it doesn't really look like there are any bears, no sells or underperform, but nonetheless, the most bearish analyst is saying, hey, I think this stock, at the end of the year is going to be at 33 bucks. And I don't know, in my opinion, for that being the bear case, based off of analysts only, right? I don't think that's too bad. If we go into here and we see what that is from here, go back up to, holy smokes, man, way back up here. Yeah, so they're saying that this is where the stock would end. Bear case. Again, these price targets can change. Please take it for a grain of salt, or take this with a grain of salt. And a lot of times these, analysts are biased on the company. And I'm not going to get into detail on that, but nonetheless, it's something to go off of. And, they're doing their job, right? I mean, their job is to research the company and do an analysis on it. And that's what they're thinking, right? They have people and clients that they're making investments for. So, you take it with a grain of salt, but nonetheless, that is huge upside. That's 64% from where we're at right now, right? I don't even need that much, to be honest with you. We get back up to this blue line or back up to this previous level. I don't know. Maybe I look at taking profits then. Who knows? I play it by ear. Honestly, trades, all work out a little bit differently. And then once the trade starts, right, like part of the job too is to manage your trade. Whether that's like setting a trailing stop loss, or just following it with a stop loss, or taking some profits or some money off the table. Sometimes I run covered calls to help manage risk. You get what I'm saying. So nonetheless, that's what we're looking at with the charts. So next, I want to jump into the fundamentals of the company. And again, as I mentioned before, I'm going to compare this to SoFi just because they're both like digital first companies, right? They both don't have the brick and mortar concept, and they both don't have a lot of overhead costs. They're a little bit different in regards to what they, target. SoFi is more like consumer finances, where Chime is more like your overall financial services. So let's geek out a little bit with some of the financials. And to get started, obviously, we're just going to take a look at the total revenue, see how these companies are growing their revenue. We're looking at SoFi in the orange. Beautiful chart, right? Nothing to complain about there. Probably a good reason why the stock has also looked like that. Straight up. But looking at Chime, right, they're not far off of their revenues or total revenues when it comes to, comparing it to SoFi. I actually was pretty impressed with this. I mean, obviously SoFi is still taking a pretty substantial lead here, but we're not too far off, right? And you can see both SoFi and Chime had a little down quarter right here, right? And then, back up, and then it looks like Chime's doing the same thing, right? Right back up. Increasing revenue quarter over quarter, it looks like, right? I mean, we have these gaps here. It's a new company, and that's what I was trying to say in the beginning of the video, but we're going to work with what we have, right? So moving on to the next, we have the net income. Again, I mean, this is not looking bad at all. We have, you can see SoFi here, again, in the orange, was negative for the longest time, and it was just in 2023 when they broke positive, right? And obviously it's just been recently that SoFi has really been seeing substantial growth in the stock price, and this is probably part of the reason why, right? Is that we're seeing positive numbers now. Still kind of all over the place here, but again, comparing to Chime, we're positive already, right? I mean, again, we had all these years of trading with SoFi negative. At least Chime is already to break even to positive, right? We're a quarter or two away from just having profitability, or if not, we already do. I'm sure you're looking at this right here in quarter two, right? And I looked that up, and in quarter two of 2025, this was a stock-based compensation, right? Probably had something to do with them going public and whatnot, but they paid out $928 million, all right, in stock-based compensation. Their net loss was $923, right? So do the math. They actually were positive that year, or that quarter, I'm sorry. Not by much. I mean, it looks like it would be a decrease from, quarter over quarter from 12.9. We would have been closer to what would that be? 0.5. But nonetheless, though, this was kind of scary when I first saw it. Holy smokes, what's going on? Maybe that's justifying the crash in the price. But no, again, that's just a one-off thing. Don't pay any attention to that. This is all good. All right, moving on. Free cash flow. We have decent free cash flow. I'm sorry, not decent, right? I mean, nothing's pretty here for both companies. I mean, you see the free cash flow of SoFi again in the orange. I mean, just pretty negative. And then, we got positive and negative. Some of this could be because they're making a lot of investments, being more of like a startup company or, a company that's in their growth phase. They're taking on a lot of different segments, right? Like, trading apps and whatnot and investing and so forth. So that could be a part of it. But again, we're just comparing apples to apples or apples to oranges, however you want to look at it. And, we have break even or positive cash flow for Chime. And again, I'm just comparing this to SoFi just because they're similar in a sense, and there's just so much hype behind SoFi, right? I mean, the stock price is trading at like almost a 68 forward times earnings, right? I mean, if that stock is trading, with that much hype into the future, Chime doesn't need to be the next SoFi, but if it just gets a little bit of that hype, this could be a pretty decent company to invest in at these levels. All right, so moving on to the next, we have the balance sheets, okay? And so here I just have them separated. So we have SoFi, and then we have Chime. But SoFi, you can see here, keeping a pretty solid balance sheet. They keep it pretty tight. I will say that. Total assets are in the orange, and then total liabilities are in the blue. And you can see, they're positive, right? They have more assets than liabilities. That's what we want to see. But it's tight. It's tight. And then obviously they keep growing assets, but liabilities keep growing with it. And again, they're probably taking investments on, which is growing revenue, but it's also costing them money to do so. Who knows? I didn't have a chance to look at it that deeply. We're just kind of looking at the essentials and overview of everything right now. But going to Chime, it's a pretty balanced sheet as well. I mean, arguably better in a sense, right? I mean, look at their assets compared to liabilities here. I mean, huge difference, right? I mean, so much more cash and assets on hand than they have liabilities. Now, obviously, one thing to keep in mind, I mean, we're looking at, I'm sure this is probably 1.7 billion, and then for assets, and then SoFi with $35 billion in assets, a big difference, right? I mean, SoFi obviously has a bigger market cap. They've seen a lot more growth. They have a lot more segments and revenue streams and whatnot, but all things equal, right? I mean, we're just comparing the two companies, and when it comes to the balance sheet, they both look pretty good. Arguably, Chime's a little bit better, just given where they're at in their company right now. All right, so total shares outstanding. This is one that I wanted to touch on, simply because I'm sure a lot of you are probably like, if you're comparing SoFi to Chime, right? You're like, well, SoFi is trading at like $25, $26, whatever it is, right? And it's such a bigger and better company, right? Based off the revenue, based off of this and that. And then you have Chime that's trading at $20 now. Like, Jack, there's not much upside because, SoFi is the better company. Why would we invest in, Chime at $20 when I can get SoFi at, $25, whatever it is trading at right now, right? Well, here's one of the reasons why, right, is supply and demand. So you can see here when it comes to, the total amount of shares that are outstanding right now, 1.1 billion shares outstanding for SoFi compared to 370 million for Chime. I mean, that's a huge difference, right? And again, so think about it. It's supply and demand. So like anything, right? When there's more supply and less demand, prices go down, right? And then when there's more demand with less supply, prices tend to go up, right? So you get what I'm saying? The biggest thing I'm trying to say here is that there's so much more supply of SoFi shares right now. And now keep this in mind, okay? Playing devil's advocate, newer companies like Chime, there's a good chance that they'll start selling, common shares onto the market to help raise capital, right? And by doing so, they'll be putting more shares out there. And so you could see this number increase. I mean, obviously look at SoFi, right? I mean, they didn't start with that many shares, but as they're growing revenues and they're trying to grow their business, they're putting more shares onto the market, which helps them raise capital for investments. So again, SoFi didn't start out this high, but that's where they're trading at right now. And let me just put things in perspective for you, right? So if you were to just cut SoFi shares in half and everything stays equal though, or constant, right? Just meaning like the demand for SoFi shares are the same, none of the fundamentals or finances changes, just simply they just took half the shares out of circulation, right? Well, then you could say that SoFi would pretty much double in price, right? With nothing else changing, minus just taking shares off the market, the price of the price per share of SoFi would arguably double. And again, so that's the picture I'm trying to paint right here is there's just not a lot of shares. So when people start buying up Chime shares, right, they start buying up that supply, it limits the supply and the stock price will move more. It moves quicker too, right? To where, again, if you have like a ton of supply, like look at like an Apple or something, right? I'm not going to pull up right now, but they have a lots of shares. I mean, it would take so much money and so much capital and so many shares to buy to move that stock price substantially, within a trading day or two. But that's not the case here. All right, so the next chart I want to bring up is just active users, all right? And I just realized that this is only 2022, but still impressive, right? 5.3 million active users compared to SoFi, right? Which is, it's actually, more than. So the next thing I wanted to take a look at was just the active users for both SoFi and Chime. I think this is super important. And so based off of this chart, which I do realize this is only going up to 2022, which I'm not sure why. A little disappointed in that data given by Physical AI, but nonetheless, you can see here during that time, Chime actually had SoFi, beat by a little bit, not much, but about the same when it comes to active users, which is impressive. I mean, that's arguably one of the biggest battles is to get active users and to keep those users. And then keep that number growing as well, right? Keep adding more and more active users. But with that being said, obviously, I dug a little bit deeper to find out this information. And then so as of 2025, right, active users for Chime Financials is over 18 million compared to SoFi Technology, which is 11.7 million active users. Like, that blew my mind, honestly. You got this company hyped up as SoFi. And it just shows that like Chime Financial actually has a lot of brand recognition, right? I mean, I know of SoFi personally because of SoFi Stadium. I'm a big football fan. Used to live in San Diego. I've been to the stadium, super nice. But nonetheless, like this was pretty impressive when I saw this. All right, so the last chart that I want to pull up is the market cap. And I like to pull this up, right? Because you see all the growth that SoFi has made, right? I mean, you can see here, SoFi is in the orange. And you can see that it wasn't long ago when their market capitalization was right around, 14,000, 15,000, even lower, right? Close to where Chime is trading now, right? And then look at it just catapult. And the main reason for this obviously is because, they went positive, they started making money and they started showing really good, growth, revenue growth and whatnot. And now they're also trading at like a higher multiple, right? I mean, this is like exactly what the share price has done. The share price has gone straight up and, obviously so has the market cap. What I'm trying to say here, though, is, in order for Chime's stock price to double in value, right? And that's assuming all things equal, right? Like, let's say they're not really growing revenue a ton, and nothing's really changing in the business that's like, bad news, I guess, right? Let's just say they keep growing at the pace they are. Just based off of market cap, if this were to double, right? If they were able to grow their market capitalization to 14 or 15, which I don't see any issue with that, right? I mean, look where SoFi is trading. And I mean, there's like a long runway of growth with SoFi. I mean, it's like some people think this stock's just getting started, right? And so they have a long ways to go. And regardless, they're pretty small market caps compared to, your 3, 4, 500 $100 billion market caps or a trillion, when you get up there. So there's a lot of room to grow, though, is what I'm trying to say. And so it wouldn't take much for, Chime just to double their market cap from here. I mean, literally, if it just starts trading at its IPO prices, the market cap would double, right? And I don't think much would have to change with the financials, in my opinion. So again, this is what I'm trying to say, right? Let's just, for example, if Chime was trading at a higher market cap around like 30 right now on this dip, and I'm looking at SoFi, that's market cap's that high, and it feels overbought, I would be like, wow, like, SoFi's making more money, this and that. Like, there's no reason why Chime should have as big of a market cap right now. But, I mean, honestly, like a 14 or 15, I think is within reason, right? Without much changing fundamentally with Chime. And and that would pretty much double the stock price, I mean, the stock price or IPO was around like 38, 40, I'm not sure what it was, something around there. And, to get back up there, that would be double the market cap and, that's about where it would be trading. So you get what I'm saying, right? It's easy to grow your market cap like that. Like here's a really good example of what I'm trying to say, right? Like for Nvidia to double at this point, right? To double, they would have to take their market cap from what 3 or 4 trillion now, I think, to 8 trillion. Like that's what they would have to do to double their market cap. Like wrap your head around that. Like that's insane. Like that's not happening. Like is Nvidia going to see awesome growth and just be a solid, you know, compounding, stock to invest in? Yeah, I mean I can see that. But to double, it's not going to happen, right? And then so that's what I'm trying to say. Like for Chime to double, that's nothing. Like that's easy. So back what I was saying, is Chime a good buying opportunity on the dip? In my opinion, it is. It definitely is. Based off everything that I'm showing you guys here, just based off of the industry that they're in, the fact that they don't really have a lot of risk. I like that. Obviously, there's always risk, right, with competition and this and that, and starting a newer company. But the risk is just a lot less than other companies, right? Like their CapEx expenditures are not crazy high. Like you saw the balance sheet; they don't have a lot of debt. They have a lot more cash on hand. You know, as soon as they turn a profit and we can see what this is trading at on a forward PE ratio, I think that would be a little bit more helpful as well. But nonetheless, like this stock is getting oversold. And I mean, I guess that's one thing that I didn't touch on that we could look at real quick. The RSI, right? So again, I don't look at this too much, but you can see right here, the RSI, we're oversold. Anything below this 30 mark is pretty extreme oversold conditions. Typically, you're going to see a bounce. I mean, could this thing keep selling off? Absolutely. It definitely could. Not saying it can't, but just one more indicator that I'm looking at, right, where it's extremely oversold. It's oversold on just about every metric that you look at, right? And again, we don't have a lot of days that it's been trading on the market, but it's oversold on everything, on every time frame, pretty much. Look at this. Just we're starting to come up a little bit on the short time frames, but you get what I'm saying, right? Like, again, just one more thing that I'm looking at. In my opinion, this is more of a swing trade for me. Okay, this is not a buy and hold forever. I do think there's substantial upside. I'd have no issue holding this stock, like I said, for 3 to 6 months, maybe longer. But knowing me, I'll probably get in, get up a good amount, and then get out. But I like it. I like the company. I think this is a good opportunity, and I hope you guys found this video helpful. If you're still here, please consider subscribing to the channel. Like this video if you found this helpful. It really helps the channel. I'm trying to grow this small channel into something bigger, so I would love and appreciate your support. And then obviously, if you have any questions at all, leave me a comment. One perk about having a smaller channel is that I can answer all my comments because I don't get a lot. So feel free to pick my brain. If you want me to cover a specific stock, let me know, and I'll see you guys in the next one.